Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, Indian equity markets are set for a soft start coming in on the fresh week. GIFT Nifty at this point of time is indicating a mildly positive start coming in for the Indian benchmark indices. Wall Street ended lower after US job report data and Apple shares for that matter fell almost more than 4.5%, clocking the biggest daily percentage decline since September 29, 2022. Now, the US jobs data raises some amount of hopes that this time around it's going to be, essentially the Fed will keep the policy rates steady in September. Also, Asian market for that matter, they traded lower ahead of the China inflation data. Let's talk about FIIs for that matter. FII sold shares to an extent of 556 odd crore and DIIs bought shares to an extent of 366 crore. Back home also you will see listing coming in for Yatharth Hospital. What typically experts expect this listing may have a decent start as it was priced almost in line with peers. The issue may get reward of the recent positive mood of the primary markets and may list around 20 to 25% upside from its upper price band. Let's talk about the earnings that we like to watch out for, and the list includes the names of something like a PB Fintech, Bayer Crop Science, Emami, you have Gland Pharma, Godrej Consumer, India Cements, Indigo Paints, Ramco Cements for that matter, Soba, and also Torrent Pharma along with Ujjivan. They'll be in focus ahead of the quarterly earnings today. In terms of what we have for FNOQs, well, FIIs, they are net buyers to an extent of around more than 1,100 odd crore in index futures. They've been sellers to an extent of 1,900 odd crore in index options. And they have turned also the buyers coming in for stock futures along with being the buyers in Bank Nifty index with a tune of around 811 odd crore. Overall, if you look at the stocks which are currently under the FNO ban for that matter, we're seeing Indiabulls Housing Finance, which has been added to the list, while Gujarat Narmada Valley Fertilizers, that is GNFC, and Hindustan Copper, along with Piramal Enterprises, stay on that list. But let's address a bunch of stocks that need to be on your list this morning, and this includes the like of Britannia, BHEL, Delhivery, Bank of Baroda, PG Foils, amongst others. Let's talk about Britannia first, where the revenue is coming higher by 8.5%, and EBITDA too has seen an upside to an extent of 38%. Margins have expanded to 17.2% as compared to 13.5% in the corresponding quarter of the previous year. Let's talk about the margin profile, up by 510 basis points, and profitability too has risen by more than 35% for this one. Now, the company has reported a flat volume growth versus the expectation to an extent of 5 to 6 odd percent. So clearly you can see some amount of disappointment there with this set of numbers, and the stock could react negatively on account of that. Revenue is higher than the consensus, but EBITDA of 37.6%, the growth that you've seen, it's coming on a lower base, and also it's come way below what the street was estimating. Let's talk about BHEL, where the losses have just widened. And if you talk about the top line growth, it's a single digit growth out there. Revenue is up by 7%. The losses have widened to 352 odd crore as compared to 192 crore seen in the corresponding quarter. Operational performance too, the losses have just widened there. 242 crore was reported as compared to the number of 90 odd crore, and orders were to an extent of 15,600 crore. Let's also talk about Delhivery now, new age companies which have been doing well. Here, the losses have been a little narrow. Losses have come in at 89 crore as compared to roughly 400 crore which has come in. Let's talk about the revenue profile. Well, we're seeing growth to an extent of around 10.5 odd percent within the numbers. And let's talk about the operational performance there. There is an EBITDA loss at 13 crore as compared to an EBITDA loss of around 254 odd crore. So you can see the narrowing down of losses. Do bear in mind that Zomato came up with the numbers on Friday, and you saw a 10% uptick coming in within that stock after the earnings were reported. It was a break even which took place on the bottom line, perhaps because of the tax credit, but operationally too, things were seeing positive for this one. Well, Delhivery is no different here. We're seeing losses getting narrowed down, and remains to be seen when these companies, the new age companies, actually start reporting in their profits on the operational front too. Well, a bit of a disappointment which has essentially crept in if you talk about the banking space. Bank of SBI has been downgraded, that's one. But let's first talk about Bank of Baroda's numbers. Decent set of numbers there. Net profitability, the bottom line, is up by 88% for the counter. NII, they've been up by 25%. And if we talk about the GNPA, they have shrunk to 3.5% as compared to 3.79%. Now, overall, if you talk about sequential, there's a weak P&L despite the decline in deposits sequentially and the lowest slippage ratio that the bank has seen in 11 quarters. That's the one. Another one that we have on the list is Paytm, where expect the stock to kind of react in a big way today. On Friday, you had Zomato, and today you probably will see some reaction coming for Delhivery along with that of Paytm. Well, Bloomberg news report suggests that founder Sharma is expected to buy in 10.3% stake in the company from Antfin. So that's a bit of development, and a major development, let's just say, which is coming in for Paytm. So not surprised there. New age companies have been shining well. They've done well thus far in the financial year to date basis. But we're going to be talking about it enough and more with the special guest that we have on the show right now. But we're going to be first addressing more that we have in terms of stocks and news, where PG Foils, where the ace investor Poranju Elliott has bought in some amount of stake in the company. Shares to an extent of 1.2 lakh equity shares have been bought, and this has been bought at a little discounted price per se, which is at around 241 rupees per share. If you talk about the State Bank of India now, the giant reported in numbers, beg your pardon, where the numbers more or less from all the brokerages around got a decent fair share of rating. The rating was pretty much maintained. But what really caught our eyes was the downgrade, which came in on SBI from HSBC. Now, do remember that banking results overall for the quarter were steady and pretty much in line, playing according to the books. It has been a great year for financials. And even in the previous year, we've seen that up move. But whether the momentum continues, whether the valuation is justifying that kind of, the kind of earning expectations, that remains to be seen, how these stocks can further perform. But clearly at this point of time, the focus remains on the new age companies. But HSBC on SBI first, where they've come in with a downgrade to hold rating, and the target has been cut to 630 per share. Sequential loan growth has been muted for this one, and the domestic NIMs too have declined for that matter for this one. Treasury profits and forex gains propped up EPS margin and cost pressure to drive ROA and EPS growth compression. Thereby, you can see that all that weighing in on the return on assets and the EPS profile of the company. Punjab and Sindh Bank, another one here, where the earnings have been a little bit weaker than what the street was anticipating. Asset quality, if you look at that, along with the slippages, they've come in at 452 crore as compared to 454 crore sequentially. Rather flat number coming in on that one. Annualized slippage ratio is at 2.37% versus 2.36%. And if we talk about the recovery and the upgrades, they've stood at 236 crore as compared to a number of 1,153 odd crore in the previous quarter. Let's talk about the write-offs there. 335 crore compares with that of 510 crore. And the restructured book, that has come down to 1.7%. So overall, not really great set of numbers coming in for, Punjab and Sindh Bank also for that matter. But overall, if you see, we're seeing some amount of weakness, which has been seen in the mid-cap names of banking per se. SBI, a downgrade coming in, but do remember the fact that most of the brokerages have maintained their rating on this one. Excuse me. And also, HSBC is the only one which has seen, downgrade coming in on SBI. But what we'd really like to focus would be on the new age companies, something like a PB Fintech, Delhivery for that matter, Zomato for that matter. We've seen some amount of sharp uptick coming in for Zomato, right? 10.5% uptick on account of the numbers that have been reported. There was a lot of chatter on the street that the break-even has essentially just happened on the bottom line front and not on the operational front. And it's a tax credit adjustment essentially, which has kind of aided the bottom line performance. But let's address the market open there for you. And then quickly, let's bring in our special guest for the show. Nifty 50. Well, we're seeing gains to an extent of 0.1% out there. And if you talk about the Bank Nifty index, we're also seeing some amount of traction building in on that one. Gains to an extent of 0.1% out there. And mid-cap index and small-cap index, that's another one for you. Just to see if there is some traction building up there within that space. Mid-cap index gains to an extent of 0.1% out there. And for small-cap index, well, the trend is no different. We're actually seeing outperformance to an extent of 0.5% out there for the small-cap index. So overall, it's a mild positive start coming in for the markets. But nevertheless, small-cap index, as usual, is doing well in trade today. Let's talk about the sectoral indices that we have overall on the list. IT index is doing well, gains to an extent of 0.5% out there. And if you talk about other sectoral indices that we have, FMCG right now down and out with losses to an extent of 0.2% out there. In terms of pharma basket, we're seeing also slight, it's a flat start with a positive momentum building in for that one after what you've seen in the previous week. And in terms of the consumption basket, the story remains intact there. Also, let's talk about the other sectoral indices that we have. Something like a metal index, the basket has been doing well. We're seeing gains to an extent of 0.5% out there. For the auto index too seems to be in top gear with gains to an extent of 0.5% out there. And if you talk about the other sectoral indices that we have on the chart, something like real estate is doing extremely well. And if you talk about the other sectoral indices, something like a PSU bank for that matter, infra and private banking index, just to see how is that shaping up, to see the trend underlying. Well, PSU bank, a flat start with positive momentum coming in for that one. And if we talk about the private bank, well, there also we're seeing gains to an extent of 0.1% out there. But let's look at the top gainers and the top losers that we have in the list overall for Nifty 50 index. Well, top gainers, M&M, it's shining bright after reporting in the numbers and the call update that has taken place. Hindalco, Divi's Lab is another one on the top gainers list. Grasim for that matter, NTPC and Wipro been doing well in trade today. So you've seen some amount of M&M and Infosys essentially are the interesting bets. And let's talk about the top losers that we have on the screen right now. Cipla, ITC, Asian Paints. These are the top losers that we have. In terms of other top losers that we have, HUL, Eicher Motors and Kotak Mahindra Bank. These are some of the other top losers that we have on the list right now. But let's actually pull up the chart of something like a Paytm, Delhivery and Zomato, all the three new age stocks, just to see how that is doing. Essentially, Paytm, where the news is coming, where the promoter is expected to buy in 10% equity from Antfin. So that's an interesting development which is expected to play out for Paytm. And look at the gains coming in for that one. 9% uptick that you're seeing for Paytm after the sharp up move that we saw for Zomato. So clearly in today's session, like we suggested, it is a day for new age companies. It is a time when we, probably go back and look at these stocks. Perhaps the valuation has now seems to be reasonable, justifying the underlying fundamentals. Look at the chart for Zomato and the 4.5% gains coming in for that one. Let's also pull up Delhivery on back of earnings out there and then go on to see Britannia. How is that, stacking up overall on the screen? We're seeing gains to an extent of 0.5% out there for Delhivery. And if we talk about something like a Britannia for that matter, which is reported in weak set of numbers, where the volume growth isn't. That's the beauty of these old age stocks. No matter, even if they have some amount of disappointment being reported by the company, they manage to somehow weather in some amount of losses. But how insulated these large cap stock and the names are in the long run, we're going to figure that out in just a bit. Let's talk about other sectoral, let's talk about probably what we're seeing with the Bank of Baroda for that matter, and Punjab National Bank, which have reported in their numbers. Essentially, great set of numbers so Bank of Baroda is down and out with losses of around 1.5% odd. And if you talk about the other names that we have, perhaps from the list, something like, PG Foils also is something that we like to talk about, where the investor Poranju Veliath has bought in some amount of stake to an extent of 1.2 lakh equity shares. Shares have been at an average price of around 240. So that also is the one which needs to be seen. Let's talk about Punjab and Sindh Bank. A bit of weakness which perhaps crept into the counter. Asset quality was sequentially weak. Slippages were seeing at 452 odd crore as compared to 454 odd crore. Talk about the annual slippages out there. A bit of, probably momentum. You can see the losses coming in for Punjab and Sindh Bank, right? Along with Bank of Baroda, like we indicated, some amount of disappointment has crept in within the PSU banking names. And on the contrary, you have something like a new age stocks which have been essentially doing well. But the focus also in today's session will be on Yatharth Hospital IPO, where the experts say that the price may have a decent listing as it was priced in almost in line with peers. And they maintain that much of that will depend on the market move. But the issue, you might just see a listing around that 375 rupees a piece level. And even in the case of a weak opening, that's all, that's what the consensus estimate is around the listing. And 345 to 350, it is a decent listing coming in, like we've seen for most of the IPOs. There was this, particularly if you look at the subscription also was great, 36.616 times. The demand was huge for this IPO, especially by the QIB investor, which raised some amount of confidence within the company. Cautious investor, however, who have been allotted shares in the IPO, for that matter, might just look at this opportunity as just a listing gain opportunity, might book in their profits right after when the share gets listed. Overall, if you look at the markets, we are doing well in trade today. And that's another one that we're looking at, probably much of absence of positive triggers coming in for the markets and a mixed global setup. If I'm just supposed to sum it for the markets right now, that's the trend which is playing out. And if you look at what we have in terms of the sectoral indices, in terms of their FYTD performance, they've been doing well. If you talk about just for the month of August, we have seen some amount of fair share, let's just put it like that. It's a fair share of correction which is trickled down in market. Remains to be seen if there is a next leg of rally which is waiting up for us. And how does that play out remains to be seen, right? Mid-cap index right now is doing well for you with gains to an extent of 0.5% out there. And if you talk about the small cap index, we've seen gains to an extent of 0.5% out there. So that's the one we are looking at. And if you talk about overall the way sectoral indices have been performing thus far, bullish trend, August per se as a month has not really stacked up well for the entire market. We aren't really surprised with that kind of reaction. The absence of positive trigger is something that might just lead to some amount of, probably a tight range coming in for the Indian equity markets. That's the one that we need to navigate and look into. Apart from that, there will be a number of things that we like to watch out for the entire week, in this week itself. You have something like, the inflation data which is going to be coming in, and bunch of earnings which essentially will be looking at, a bunch of earnings which probably will dictate the market trend. So that's that in terms of what we have in terms of stocks and news. In terms of IPO update, well, the primary markets looks pretty decent. SPFC Finance is another one, day 3 of subscription coming in for that one. And if you talk about the performance that has just gone far, well, we are seeing decent set of subscription numbers coming in for SPFC Finance too. Remains to be seen how this issue closes. But overall, Rakesh Jhunjhunwala Rare Enterprises also is one of the, IPO, Concord IPO, which is up for subscription out there. And that's also faring well. But do remember the fact that these PE investors do have a lock-in period, and lock-in period to an extent of 6 odd months out there. Remains to be seen how does the company perform. With a little chat that we had in terms of the management of Concord, right now it seems to be performing within that niche biotech pharma segment, and that remains to be seen. How is that doing well? How does it stack up? For now, the margins have normalized for Concord Biotech, where we're seeing some amount of traction coming in. We're seeing the underlying fundamentals being extremely strong for this one. Valuation seems to be pretty in line with what the peers have been demanding. It's not been on too upside, and also because of the fact that we've seen that normalization of the margin profile coming in. According to the management, 40-42 odd % is the levels that we can be looking at, and that's that when it comes to the IPO updates. So that's one, but we have a couple of names that we really need to look into, probably a closer look out there. Let's actually pull in Britannia along with the other FMCG names, something like an HUL for that matter, and Dabur for that matter, remains to be seen also. Britannia, we're seeing losses coming in to an extent of 1.5 odd % out there. And if we talk about the other names that we have, HUL, Dabur, all of them right now are witnessing some amount of profit booking which is taking place, and no surprises there. Perhaps the sentiment is a little subdued for this entire space right now after what Britannia has reported in the numbers, where the volume growth has been flat as compared to nearly declines coming in for that one. So that's that when it comes to the performance coming in by the major FMCG major. But what really also needs to be discussed is the fact how BHEL earnings have done. Losses which have more than widened. Talk about that. Bottom line, we've seen 352 odd crore as compared to 192 crore that was seen in the corresponding quarter. Right now, you're seeing that's a bit of disappointment creeping in for the counter. Losses to an extent of 0.5% out there. And that's that. I mean, BHEL too, like most of the earnings that we've seen today, Britannia, BHEL, Punjab and Sind Bank, Bank of Baroda, all of these stocks have not reported good set of numbers. It's a rather weak set of numbers that we're looking at. And despite that, look at the triggers. It's been mixed global cues. Earnings have not been that, it doesn't spring up much of a positive surprise out there. The numbers are weak, but the market is holding up right now, and we're seeing gains coming in for the markets, perhaps a little in the tight range like we anticipate. It's expected to consolidate just before the next move could take place. But overall, the sentiment remains upbeat. That's that when it comes to the overall performance coming in for the markets. And Delhivery is something that I'd want to talk more about, because new age companies, the more you talk about them, the less it is, because these are the counters which are shining bright and perhaps have taken investors by surprise, right? So matter you had 10% gains coming in. Delhivery today, it's actually stepped into a bit of loss. To an extent of 0.5% out there. The net losses have narrowed down to an extent of 90 odd crore as compared to 400 crore in the corresponding quarter of the previous year. Top line, it's up by 10.5%. And if we talk about the EBITDA losses too, we're seeing to an extent of 13.1 crore as compared to 254 odd crore. The real question is when these companies will break even on the operational front. That remains to be seen. But right now, we are expecting in some amount of traction to be building in for the new age companies. How justifiable are the valuations or not remains to be seen. But overall, that's the trend which is stacking up for you. And with this, it's a wrap. Thank you so much for joining in.